Talking about Adidas today. Really great brand, obviously in competition with Nike, and we're going to compare and contrast Adidas with Nike. And they're both great, but I'm going to give the edge to Adidas right now. The numbers are just that much better, just a little bit better on both the performance, corporate performance, like the generation of cash flow and return on invested capital, plus the valuation's better. So you're going to win in two categories and two big check marks in my estimation. So let's start off with Adidas, and then we'll jump over to Nike. So here's the track record of cash flow IRR, return on invested capital. Pretty good track record here. We have almost 20 years, and never worse than 15. So back in 2009, we had a 15. It has been a little bit cyclical. Really jumped up in 2012. I'm not sure. We have to check into that. It's 31%. So it just had a really good year, and then kind of dipped down, but it's really gone up in the last few years. And you see the stock has gone up at the same time. And we find this all the time. As your return on capital is improving, your stock's improving as well. Valuation, I have not tweaked this whatsoever, and we do have about 20% upside there. I could argue, and I would argue, that this would beat the fade because they've never done worse than 15. And we could try something. I don't want to get too crazy. I'll put in 12. I don't like to put too aggressive targets out there, even if we're just doing scenario analysis. But if they could do a 12% in the long run, and the market bought into that forecast, they would be worth $445, which is a 46% upside, and that's a very plausible scenario, right? So again, I don't know if I want to put that as a target necessarily, but scenario analysis would give you suggestion that it has potential to grow, and there's room for error, and that's important too. Okay, so let's contrast that with Nike. So here's our Nike model. Nike's track record is completely consistent. It didn't have those spikes up, as you see, but it didn't have too many spikes down. Now, overall, it's actually a lower rate of return than Adidas. Their lowest was 13. It's typically in the 15-16% range. It's actually at one of its highest now, 18%, so it shouldn't be a surprise that the stock's at an all-time high. The issue I have, though, is not the consistency. I love it. It's just I'm having trouble getting to this valuation. I've even tweaked this one already so that they would earn a 10% in the long run. Just slightly lower. You want to be conservative in your estimates, and we get actually that it's still overvalued, even with it only fading to 10%, which is relatively the same as the scenario we did with Adidas. In terms of stock performance, actually, Adidas has outperformed Nike, and I would expect it to continue until these kind of valuation and performance measurements either come normalized. Like if they're both at around the same, then I would expect the performance to be the same. But given that Adidas has better return on invested capital and a better valuation, for my money, I'm going to stick with Adidas for now.